3,000 is a nice gold price for a lot of different reasons. And if that's the case, then where does the silver price go? So $50 is 60 to 1 on the gold price, right?
Right.
Like a 60th. So as you know, I mean, that would be somewhat reasonable. It's like as you keep going higher, right? It's that ratio is kind of important. It's like 80 right now. So
Right.
if it went to 40 or something, I would think we would be in like a speculative bonanza, right? I mean, because typically like when things get a little strung out. So I mean, a $50 silver price. I mean, that's not that crazy.
Gold prices soared to unprecedented levels on Wednesday, July 17, 2024, as investors increasingly anticipate a potential interest rate cut by the U.S. Federal Reserve in September. The weakening dollar has further bolstered demand for the precious metal. Futures for the yellow metal climbed 0.1% to $2,470.20, while spot prices held steady at $2,466.02 per ounce. In contrast, silver experienced a 2.1% decline, settling at $30.73 per ounce. EBTucker, a renowned investor and author with extensive experience in precious metals, predicts even greater heights for gold. We're looking at $3,000 per ounce for gold, Tucker states. At that level, silver should be priced at least $50 per ounce. Tucker's forecast is based on his analysis of the gold-to-silver ratio, which currently stands at 79.93. He anticipates this ratio could tighten to 60 to 1 or less if silver prices rise significantly. The ongoing rally in gold prices is attributed to several factors. Central bank interest has played a crucial role, with many emerging market central banks increasing their gold reserves. Additionally, physical demand from consumers has offset the steady decline in ETF holdings since mid-2022. Analysts predict that a re-lengthening of investor ETF holdings, triggered by the onset of a cutting cycle, could quickly tighten the physical gold market. This scenario is expected to be positive for bullion and supportive of a continued price climb through the second half of 2024. Despite the current surge, Tucker advises investors to maintain their positions in both gold and silver. When you have something in an uptrend, you leave it alone. You even add to it, he recommends, cautioning against trying to time the market perfectly. Please tune in for our exploration of EBTucker's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
It's important to realize that there's not that much physical product, and the price is going to go higher. And here's one more thing I want to tell you.
Right.
I know a lot of dealers. I'm sure you also know a lot of dealers. What they tell me is that the phone rings 10 times, there's 8 people selling and 2 people buying, okay? And what that tells me is there's a lot of people that bought gold when Mr. T was selling it 12, 14 years ago or something. And I'm sure they did the same thing with 2011, September, I remember distinctly, silver was like $30.
That's insane.
And it felt cheap. It felt cheap because it had been 50 overnight in like April. So 30 felt cheap, and it's still $30. So the gold rally's here, okay? The average people are selling. They're almost always wrong, so they're selling. Like what I say about these people, they're very nice people, but these average people, they usually look for shelter after the storm.
Right.
So like they bought a coin in 2011 for 1,800, and then finally the gold price is 2,000 14 years later, and they get rid of it. And where is the gold price going to go? Much higher.
3,000.
And so exactly. And so 3,000 is a nice gold price for a lot of different reasons. And if that's the case, then where does the silver price go? I mean, where do you think?
I think silver should be way over 50. If gold is hitting 3,000, it should at least be at the 40, 50.
Okay, so $50 is 60 to 1 on the gold price, right? Like a 60th. So as you know, I mean, that would be somewhat reasonable. It keep going higher, right? That ratio is kind of important. It's like 80 right now. If it went to 40 or something, I would think we would be in like a speculative bonanza, right? I mean, because typically like when things get a little strung out. So I mean, a $50 silver price. I mean, that's not that crazy. Do you know what I'm saying?
It's not that crazy.
Yeah, I mean, the gold price is not going to go up overnight. It's not going to go up like on a Sunday night, $300. Forget about it. Because the thing is like for $80 and $90 an ounce, you can put on that futures short, and people are going to do that. Okay, and so it's going to walk up in a measured way. If you look at that chart, if you zoom out 20 years, looks fabulous. I mean,
absolutely,
and it looks great in the shorter term too. But everybody that thinks like you're going to wake up one day and you're going to be trading gold for groceries. Like, forget about it. I mean, it's not going to happen. These are highly liquid, highly leveraged, highly, watch markets, okay, with lots of depth, with lots of accessibility from retail to institutional to algorithmic level. Forget about it, top to bottom. However, they are in an uptrend. Right. And when you have something in an uptrend, what you do with it is you leave it alone. You leave it alone, you add to it. So you don't worry about, like, you'll know when it's cresting, when things get a little crazy. It's kind of like right now.
In a striking turn of events, gold prices continue to surge while tech stocks face a downturn, signaling a significant shift in market dynamics. EBTucker suggests that gold is undervalued, asserting that it should already be trading at $3,000 per ounce. This bullish sentiment comes amid a complex interplay of economic factors. While gold's price movements have seemingly decoupled from real yields and Federal Reserve policy expectations, experts believe additional support for the precious metal is on the horizon. Gregory Shearer, head of base and precious metals strategy at JP Morgan, points out that the anticipated shift in monetary policy could catalyze gold's next leg up. We still think this would add an extra pillar of support later this year, mainly through an eventual shift back toward retail ETF inflows, as money market funds become less attractive, Shearer explained. Interestingly, gold prices have experienced a significant uptick, even as ETF holdings continue declining. This divergence suggests that the current rally is driven by factors beyond traditional investment flows, including geopolitical tensions and inflation concerns. Let's get back to the interview.
What's surprising is it's not 3,000. I mean, that's really the price probably ought to be 3,000. Now, I don't say that like I'm disagreeing with the market, don't get me wrong. But what's been happening right now is we have a big rotation going on. The last few days, you've seen it, tech's going down, gold's going up. I'm not necessarily as like hardcore about metals as you would think. I mean, I in honor of our meeting today, I went and, thought I would have a couple of blocks of metal on the desk, but so I mean, I keep a lot of metal, but the reason I keep it is not like, it's not like some speculative bet, I mean, it's just that if you don't have some of this stuff, you're crazy. I mean, seriously, like, the time to buy it it's kind of like, when's a good time to plant an oak tree? Yesterday, right? So, or today. What you find is that, like, they're very cheap, and you're going to look back and I think you're going to say, like, wow, I mean, these metals were really cheap. And so you don't need to go overboard, but, like, you need some. What happens is, if you're going to be wealthy, which, if you're watching this video, that's your aim, right? It's nothing wrong with that, by the way, because what it means is that you have some ability to steer your life. Like, you're not being, somebody's not telling you to sit down, Simon Says, all day, right? It's like you're able to do increasingly more things you want to do, and you can tell people that you don't want to do things when you don't want to do it. That's the goal. So the reason I like metals, I always have, and as you mentioned, I wrote a whole book about this, is that you just get a little bit every now and then, and you stabilize yourself a little bit, and you sleep great, and you just feel, you don't get as upset about things, and you don't feel like you're getting whipped around when the market's up and down. And it helps you see clearly, and you make better decisions. That's why you get them. So I think your gold price goes to 3,000 like pretty quickly. I mean, this last few days has been pretty nuts. I mean, you've seen some big moves, and I don't know. I mean, it's controversial to say this, but, like, the futures market controls the spot market, right? It's like the tail wags the dog, and it's actually not really a conspiracy. The thing is that it's so easy to move the price. Why would you not do it? And I don't know if there's this book called The Prize. Do you remember this book? The oil book called it's a really important book in the oil market. It's called The Prize. So Jurgen wrote it. Yeah. And so basically, The Prize, before he wrote the book, or like simultaneous, he did this like video series back in the 90s. It's like early 90s. And it's basically the whole history of oil. It's really fun to watch. It's free on Amazon. And there's this little part in it, if you watch it very carefully, there's this little part in it where he says something very important for the gold market, and he talks about, there's a lot of deep history in how the oil market evolved, and one of the big turning points for the West was in the 80s. They sort of figured out that they could prevent another energy crisis by controlling the oil price using the futures market, and he says it pretty much just like that. Okay. And when you hear that as a metal person, you're like, oh, yeah, that sounds familiar. Right. so basically, the reason I bring that up is because you look at the price today. Where did the gold price go? 24.50. Now, even if you're like totally into silver, you got to watch the gold price. I mean, like the gold market is the more liquid market. It's the more actively traded market.
Right.
And it's kind of like the mothership, you know, for the metals market. And so you got to watch the gold price. And you see real heavy volume pulling to that 24.50 level. And those round number levels are big delivery levels. And, you know, they're big places where people have risk on. And there's a lot of action there. I mean, I'm telling you, you'll have, there are days, high vol days, where you'll have, I watch it on this is a Bloomberg terminal, so I watch this stuff.
Right.
You'll have like 45 million ounces of gold trade on the futures market. Now,
that's crazy.
That's like, it's crazy.
Considering the factors at play, such as potential shifts in monetary policy, central bank interest, and physical demand, do you believe these precious metals will continue their upward trend, or do you anticipate any significant corrections ahead? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.